Good morning, everyone. Today is Monday, April 4th, and I'm Marv Eisen, the Timeless Dollar. And looking at the economic calendar, we start out, nothing's happening today on Monday. Tuesday, nothing either. These are things that are going to be moving the market that I'm talking about, but look out for Wednesday. Wednesday, April 6th, we have right here at 2 p.m. the FOMC minutes. And as you know, you should, if you're wise, stay on the sideline during, just before, during, and just after that announcement, because that announcement tends to have very volatile market moving tendencies. And so you can make a lot of money very quickly, but you can lose a lot of money very quickly. And what you're shooting for is consistency, not one-shot deals where you make a lot of money or lose a lot of money, and then if you lose, you have to spend the next month trying to make back what you lost. So we don't want to do that. Moving along to today's news, and all candles, all futures are in the green. Isn't that wonderful? Not so wonderful. Let me tell you something. These numbers are basically flat. Oil is still between $100 and $105 a barrel. The war is still raging. Inflation is still up there. We don't know what the Fed is going to say on Wednesday, and so it's going to be a very interesting week. But of course, as a day trader, you know that the market goes up and down, and you just want to be on the right side of the move. Moving over to the S&P, and this is the E-mini chart, or this is the micro E-mini actually, and I have my trading zone here for Friday. Now Friday, prices closed the gap early in the day. That was a good trade for about 17 points, but the rest of the day, difficult to trade. As I said in my previous video, I found Friday to be a day to stay away from, except for the gap trade. I really didn't see anything over here. Prices typically traded narrower than my trading range indicated. My trading zone is over here that I calculate based on Taylor's book method. The close of the previous day, Thursday, was over here at 45.27, and that proved to be the target that the market gravitated around on Friday. Now, if you look at the day's trading, very choppy, up and down, and look at the end of the day. The bulls came in just in the last few minutes of the day, pushed the prices up about 25 points, very sneaky. This was a sneaky move. Prices really, they were up by 5 points, I think 6 points as a result of this, but otherwise, this was a momentum move, of course, difficult to spot, and I just didn't want to touch it because the previous action of the day, there's no trend. The only thing, support and resistance, there was a resistance line right over here at 45.37. But again, look at the up and down chop. It really was not a day to trade. There are days that you should stay away from. So if you're successful in trading, here's my message for today. If you've been successful in day trading, my advice to you is just keep doing what you've been doing. Because if you're successful on balance, now I know you have some losers mixed in with the winners, but if you're successful on balance, just keep doing what you're doing. But if you're not successful, let's assume that there are two things overall that you have to do as a trader. You have to, first of all, know what to do, and second of all, you have to actually do it. So maybe you don't know the basics. Maybe you don't know the essentials. Now, what are those essentials? You need to know the candlestick patterns. You need to know time and price trades. You need to know your trade entries. You have to have your trade setups that you are familiar with and you know how to recognize. You know how to use the trading zone. If you don't know how to calculate the trading zone, you can get it from me at my site, timelessdollar.com. I make it available every day. Buy a subscription. It'll cost you just about a little more than one contract on the E-mini. Well worth it. The trading zone generally tells me where support and resistance is, and I'll show you how to use that trading zone. This is a very valuable tool. But assuming that you know the basics, you know the support and resistance, you have the trading zone, you know the previous day's close, you know the intraday high and intraday low, you know to look for those things. Assuming you know those basics, then what else is there that could possibly be preventing you from being successful? Maybe it's your own personal makeup. Psychology makes a big part in trading. Stay the course, persistence matters. This is Marv Eisen for Timeless Dollar. Again, Monday, April 4th. Thanks for watching, and I'll see you in my next video.